Hello, in this video we will take a look at bullish absorption and how to trade it. What is actually bullish absorption? A bullish absorption is a situation where a large limit sell order absorbs all the buying aggression. On the footprint chart, it appears as a strong delta with price rejection. All of this occurs with significant volume. This pattern is observed at important key levels and signals a reversal against the absorbed side. So, in case of bullish absorption, we therefore prepare to open short position, because aggressive buyers are absorbed by passive sellers. The main idea of bullish absorption is this. Whenever we see strong buying aggression on the chart, but the price still fails to move in that direction, it signals that big players are stepping into short position using limit orders. Our goal is to follow this behavior, since it's big players who move the market. Once bullish absorption is formed and confirmed, and all conditions are in place, we open short position. So, how can we identify and confirm absorption? For us to consider bullish absorption as a strong, the following aspects need to be present. First, key level from higher time frame. Price needs to be in. Key level from 4-hour, daily, or 1-hour time frame. That's the first condition. Next, we need to see swing high points being swept. Above this swing high points from lower time frames, we need to see a huge delta. In case of bullish absorption, we want to see huge positive delta. Next is strong volume. So the candle where absorption occurs must not only have a strong positive delta, but also high volume. And of course, we also want to see price rejection through lens of price versus participants concept. That means we closely monitor the exact price levels where delta is forming and how price reacts to it. Ideally, we want to see a volume area and the majority of positive delta concentrated in the upper part of the candle. Here we can see an example of where to look for absorption. Price is at 4-hour key level. On a 15-minute chart, price tested the swing high level. And on the footprint chart, we can see a large positive delta supported by strong volume. So perfect, we have everything we want. Price is in a key level from higher time frame. We can see sweep of the high point, a larger positive delta, strong volume. The bigger majority of these volumes and of this delta is formed in the upper part of this candle. And now we want to see price rejection, which is the final confirmation of our short setup. There are several cases we can consider as the price rejection. The first absolute best one is classic price versus participants rejection, where price forms volume area and the volume with delta in the upper wick of the candle, and the candle eventually closes bearish. In this case, absorption is confirmed and we can enter a short position. The stop loss is always placed above the candle where absorption occurred. If the delta and the volume are concentrated in the upper part of the candle, but the candle closes bullish, you can wait for next candles to close below of that absorption candle. Or you can wait for the change of character. These are also one of the methods that you can use and consider as a price rejection. Again, if you see close below the candle where absorption occurred, or change of character, you can enter a position, again placing the stop loss above that candle. Very important is to always enter the position as a limit seller. Why? Because you will pay up to 6 times lower fees on entry. More about that in the next module. Here's a practical example. Price is located in daily fair value gap, which is a strong key level that tends to push price down. We switch to lower time frame and start looking for swing high levels. Here we see 2 swing high points, price tested both of these, and exactly above them, absorption occurred. Strong buying pressure, but minimal price movement in their direction. Someone filled their sell limit order. The candle formation isn't perfect, but most of the delta is concentrated along with the volume area on the upper side of that candle, without any follow through. So we then wait for some rejection to finally confirm the whole setup. Here, a close below of this absorption candle occurred, so I enter a limit sell with stop loss above the absorption candle. I place the limit order so I risked a specific percentage of the account. This will be also explained in the risk management module. Usually, I use 1 to 1.5 risk to real ratio, but taking this into account, the final risk-to-reward ends up around 1-to-1. As I mentioned, the absorption candle's formation wasn't confirmed right away, so I waited for close below it. Alternatively, I could have switched to 1-minute chart, where you can see trend break and so-called change of character, which can also serve as a price rejection. If I wanted to place a limit sell immediately after the absorption candle closes, it would have to look like this: a strong bullish delta with the value area in the upper part of the wick, and the candle itself would have to close bearish. This is truly strong price rejection. So this is the way we trade short positions using bullish absorption. In the next lecture, we will take a look on bearish absorption, which is basically the opposite.